Are you ready to unlock the secrets of power and perception? Then this is the book for you, United States of Pimpin' by me, Don Kalam, the top 10 things I learned from pimping that applies to the corporate system. Here is where I bridge the streets and the boardroom with 10 raw rules from the pimp game and 10 eye-opening principles for life and governance. I will challenge everything you thought you knew. Discover uncomfortable truths that will make you rethink love, loyalty, and leadership. It's time to reclaim your identity, your sovereignty, and navigate life's games with strength and awareness. United States of Pimpin' is more than a book. It's a call to action for your journey to freedom and empowerment. Don't just play by the rules, rewrite them. Get your copy today and transform the way you see the world. Pre-order your copy now on Amazon by searching Don Kalam, United States of Pimpin'. Much peace and love.
Have you ever, looked at your birth certificate or maybe your social security card and just wondered, is there something deeper going on here? What if these documents, these things we just take for granted, actually held the key to, a totally different way of engaging with the world, a way that could fundamentally redefine how you relate to money, taxes, even your own identity?
It's a pretty radical thought, isn't it?
It really is. And today, we're taking a deep dive into exactly that kind of thinking. We're looking at an intriguing and honestly pretty provocative perspective from Don Kalam over at Dreamkeepers Radio.
Right. Don Kalam, he holds a doctorate in business and law, which is important context here.
Definitely. And he presents this really compelling, sometimes controversial view of the United States. He argues it's fundamentally a commercial jurisdiction. So our mission today is to unpack those arguments. We want to explore the surprising nuggets of knowledge he pulls out from common legal stuff, financial concepts, and help you understand what this unique lens might mean for how you approach your own financial life.
Yeah, we'll be touching on everything from the paper your birth certificate is printed on, apparently, to the sophisticated strategies the super wealthy use.
All through this very specific entrepreneur-focused framework that Kalam argues is, the real blueprint for success.
So the material we're digging into, it comes from two main talks by Don Kalam. One's called Commerce, Birth Certificates, Trade Names, and Social Security Numbers. And the other is Natural versus Legal Person, Wealth Management Strategies. And it's really crucial as you listen to remember these are Don Kalam's interpretations. They're his viewpoints shaped by his background in business and law.
Absolutely. We're here as guides, right? We're navigating his specific ideas impartially. We're not endorsing them, just laying them out so you can consider them critically and hopefully become better informed.
Exactly. It's about understanding his perspective.
Okay, so let's unpack this. Don Kalam kicks things off with a foundational claim. And this really sets the stage for, everything else he talks about. He argues that the United States just isn't what most people think it is, and understanding its true nature fundamentally changes how we should see our place in it.
Right. It's a big opening statement.
So what exactly is this foundational claim? How does he redefine our understanding of the very fabric of our society?
Well, he's very emphatic about this. Don Kalam asserts that the U.S. is, at its core, a capitalist society. Specifically, he stresses it's a republic, like it says in the Constitution.
Not a democracy or socialist.
Exactly. He says it's not a democracy or a socialist society, and he argues that many people misunderstand this basic distinction. And that misunderstanding, it can really hit your financial well-being.
Okay, so republic versus democracy. Why is that so critical in his view? Is it just semantics?
For Kalam, it's definitely not just semantics. It's a critical, legal, structural reality. He believes this whole Republican structure inherently fosters a, what he calls a laissez-faire environment.
Laissez-faire. Okay. Free market.
Yeah, basically a free market system, one where enterprise is encouraged, where the opportunities for individuals to open businesses are, supposed to be plentiful.
So starting a business is encouraged.
Highly encouraged. He talks about setting up statutory public entities like a normal corporation or even more private entities. And he makes the point that the barriers to entry are often, surprisingly minimal.
Like setting up an LLC.
Right. He gives the example of LLC costs, even in a place like Illinois, where he says it might be, $600. He frames that as a manageable investment for what he sees as the default path to success here.
The default path. Wow. So not being an entrepreneur is a disadvantage.
A significant disadvantage in his view. It's like trying to swim upstream, he suggests.
Yeah.
He believes that if you're not prepared to open a business in this society, you're missing the point almost.
And he connects this to how fast things change too, right?
Yeah, he uses that to illustrate the dynamic nature of this commercial environment. He points out, think about the last 20 years. No Google Maps, no Facebook, no YouTube back then.
Good point.
He argues this constant churn is clear evidence of a landscape just ripe with entrepreneurial opportunities, but only for those who actually understand and adapt to its commercial nature.
That's a really powerful reframing. So if we're operating in this capitalist republic, this commercial jurisdiction, what does Kalam say that means for our day-to-day life? Like even our ID documents, does it impact us right from birth?
Oh, absolutely. Kalam takes that foundational idea and pushes it further. He asserts that simply by being born in the United States, you are, quote, born into a commercial jurisdiction.
Born into it.
Born right into it. And he's very clear, this isn't some secret the government's hiding. He says it's just the reality, and it's your responsibility, the individual's responsibility to understand it, and critically, to teach it to your family.
Okay, so how do we understand it? He has an analogy, right?
Yeah, he calls it the rule of the environment. It's pretty simple, like gravity. You jump up, you come back down. It's inevitable. He says understanding the commercial rules here in the U.S. is just like that. It's essential for, well, survival and success within this environment. You have to know the rules of the game.
And the purpose of the game.
In his, let's say, stark perspective, the fundamental purpose of this whole system is to make money. Period.
Wow, blunt.
Very blunt. He doesn't mince words. He basically says, if you don't grasp this commercial reality and engage with it, you're going to end up broke.
So much for the last will be first.
He addresses that directly. He says that idea is spiritual, maybe applicable only in heaven, but not here, not on this planet. Here you have to understand and play by the established commercial rules if you want material success.
So, recognizing this commercial nature is key. More important than other affiliations.
He believes so. He argues it overrides personal feelings, nationalistic pride, even religious beliefs when it comes to achieving prosperity in the material world. It's all about the commercial jurisdiction.
Okay, so if we're born into this commercial system and success means understanding its rules, then our very first documents must have some kind of commercial weight, right? What about the birth certificate? Seems pretty straightforward.
But that's where Kalam really shifts the perspective. He argues it's not just a simple record of birth. He sees it as a foundational commercial document, like the very first contract in your commercial life.
The first contract? How?
He gets specific. He points out that birth certificates are printed on, and he calls it this specifically American banknote paper.
Like money paper.
Exactly. And he insists this is not an accident. It's a deliberate symbol. It signifies that we live in a, quote, certificate-based society, a society built entirely on contracts.
Huh. Are other documents like this too?
He mentions marriage certificates as another example, falling into this category of commercial instruments. But the birth certificate is the first one.
And what does it do, commercially speaking?
Kalam asserts that issuing a birth certificate actually creates what he calls a United States person.
A United States person, not just me.
Not the natural flesh and blood, you know.
Right.
He explicitly defines this U.S. person as a commercial entity.
An entity?
Yeah.
Like a company?
Sort of. His logic is, look, the United States itself is fundamentally a commercial entity, right?
In his view, yeah.
So any person created by its foundational documents within its jurisdiction must also be, by extension, a commercial entity.
Wow. Okay, so that simple piece of paper becomes this huge commercial instrument from day one.
Exactly. It lays the groundwork for your entire commercial engagement with the jurisdiction, binding you into its system of contracts and obligations right from the start.
That's a lot to take in about a birth certificate. So if that's our first commercial contract, what about the other identity things we use, like trade names? And the big one, Social Security numbers. What's their commercial role? And what about our liability?
Right. This leads directly into personal accountability within this commercial framework he's describing. Kalam really stresses that understanding these commercial laws is crucial. If you don't, he says, you're inevitably going to have a bad relationship with the jurisdiction.
Makes sense if you're breaking rules you don't know exist.
Precisely. So building on the birth certificate idea, he explains that trade names are also fundamentally based off of contracts.
What counts as a trade name? My business name.
That, yes, but he defines it more broadly. Any name you use in commerce. Could be your given name when you use it for business, a specific business name, even like a pen name if you're writing commercially.
So any name used for business is a commercial name?
In his view, yes. Because the U.S. is a commercial jurisdiction, any name used within it for business purposes automatically becomes a commercial name. He even suggests you could consciously choose to stop using your natural name commercially and operate solely under a commercial name.
Interesting. Okay, now Social Security numbers. Most people think those are mandatory, right? You need one for everything.
That's the common assumption, but Kalam challenges it. He offers a pretty striking perspective here. He tells stories, personal anecdotes about well-off friends he knew, even back in high school, who apparently didn't have SSNs.
Really? How do they manage?
He doesn't detail that, but uses it to suggest that having an SSN isn't this absolute unavoidable requirement for living and succeeding here.
So he sees it like the birth certificate, a commercial tool.
Exactly. He views SSNs as commercial instruments, just like birth certificates, and here's the key part. He asserts that individuals fundamentally have a choice to either use or not use them, especially when it comes to conducting business.
A choice. That's a huge claim. Most people feel like they have to use their SSN for jobs, banks.
He acknowledges that's the common practice, but frames it as potentially uninformed participation in the system. He suggests the informed person might operate differently.
Okay, but he also talks about the history of the SSN, right? Why were they introduced if they weren't always around?
Yes, he provides a fascinating, though maybe controversial, historical take. He claims that before, say, 1913 or maybe 1933, people didn't have SSNs.
But taxes existed before then.
Right. So his argument is what changed? He contends these instruments, SSNs included, were specifically put in place to hold the legal person, that commercial entity we talked about, accountable, to make sure debts got paid in a system increasingly focused on commerce.
So it wasn't about taxing individuals directly.
He links it back further, very provocatively, to the U.S. separation from England. He claims that split was primarily driven by a desire to avoid personal taxes imposed by the crown.
Huh. I haven't heard that specific angle before.
He argues the goal was to set up a society where entities, trusts, corporations, etc. were the primary players, encouraging charity and managing public good through private means rather than direct personal taxation. He points to things like colleges, hospitals, saying many were started through private endowments, part of this entity-driven, charity-based system.
Okay, so the SSN fits into that as a tool for entity accountability.
That's his framing. It's for commercial accountability, managing debt within this specific framework. And this leads him to ask the critical questions about liability.
Like
Who's liable? When you use that SSN, who's on the hook? Is the government somehow backing your debt? Does it disappear if you declare bankruptcy using your SSN?
Tricky questions. And he mentioned something about double bookkeeping.
Yes, he introduces this idea of double bookkeeping with the county. He doesn't fully flesh out the mechanics in the source material we reviewed, but the implication is there's some kind of parallel financial record keeping going on.
A separate ledger for your legal person.
Something like that. A less visible account where your legal person interacts financially with the jurisdiction, building up this commercial record, these obligations.
And if you don't know about it,
You're operating blind, right? Constantly tripping over commercial rules and obligations you weren't even aware of. And that, he says, leads to that bad relationship with the jurisdiction. Understanding is paramount.
Okay, this is where it gets really, really interesting for me. He's saying that the moment we get that SSN, we're sort of programmed to think of ourselves differently as this legal person separate from our natural person.
Yeah, that's a core part of his argument.
So what is this amalgamation he talks about, this merging? And more importantly, what's the alternative he's pushing? How do we navigate this?
He uses this specific legal term, amalgamation. It just means to merge or combine things. And Kalam argues that most people, totally unintentionally, amalgamate. They fuse their natural person, that's you, the living, breathing individual, no number attached, with their legal person.
The legal fiction.
Right. The legal fiction, the entity that's represented by things like your social security number. He compares it to a small business owner who messes up and mixes their personal bank account with the company account.
But on a much bigger identity level.
Exactly. And he sees this blurring, this amalgamation, as a deliberate control tactic that comes from what he calls a public mindset. It keeps people operating within the system in a way that benefits the structure, perhaps, more than the individual.
And he has that visual cue, right? The all caps name.
Yeah, he points that out specifically. Look at your social security card, he says. The name is in all caps.
Finest, yeah.
He argues that's not just random formatting. He interprets it as a specific grammatical signal. It tells you that name refers to a legal fiction, an entity, similar to how corporate names are often styled on official documents. It's a flag saying this is the entity, not the natural person.
So it's a little code hidden in plain sight, basically.
Yeah.
And he ties this natural versus legal person thing to tax history, specifically 1913.
He does. He brings up the 1913 income tax laws, saying they're absolutely critical to understanding this whole separation.
Why those laws?
Kalam claims those laws were specifically written for legal persons, for those legal fictions, those entities. They were not designed, he argues, for natural persons.
We'll be back after a quick break.
Peace and love, it's your boy Don Kalam, and welcome to Dream Keepers Radio, that private life podcast. You're here, tuned in with your boy, and this is brought to you by Follow the Yellow Brick Road by Don Kalam. Search the book on Amazon now. Go get the book and uncover the matrix and how the United States is operating in the financial marketplace. Much peace and love.
So the income tax was meant for corporations and trusts, not people.
That's his assertion. And he goes further, claiming these laws were intentionally crafted by wealthy, informed families, people who understood the system.
And they designed it how?
He says they designed it cleverly to work for both the informed, who knew how to keep their natural and legal self separate, and the uninformed, who would unknowingly merge or amalgamate the two.
Wow. So the system benefits those who know the distinction.
That's the implication. It allows the informed to structure their affairs through entities, minimizing personal tax liability, while the uninformed, by merging, end up taking the full hit of personal taxation on their natural person. He presents this as the fundamental blueprint for how the wealthy manage their affairs.
Okay, this leads to that stark choice he presents. The employee path, using the SSN, versus the entrepreneur path, using an EIN. Why does he see such a massive difference between these two numbers? How do they impact liability and freedom?
This is really the core of his wealth management philosophy. It boils down to this mantra he repeats: own nothing, control everything.
Own nothing, control everything. Sounds counterintuitive.
It does, especially because he contrasts it with what he sees as the average person's desire. Most people want to own something, right? Like own their house, own their car. But Kalam includes owning things you didn't even create, like your social security number in that category.
Owning your SSN, how does he see that?
He's quite provocative about it. He calls the SSN one of the lowest numbers you can have in commerce. He basically labels it a welfare worker number.
Ouch. Why?
Because it's tied directly to the Social Security Administration, which he describes as essentially a trust set up to provide Social Security insurance, what he calls a handout, when you hit 65. It's not, in his view, a tool designed for building entrepreneurial wealth.
Okay, so the SSN is the employee handout number. What's the alternative for the entrepreneur?
The alternative, the informed choice, according to Kalam, is the employer identification number, the EIN.
Right. Businesses get those.
Exactly. And he argues that using an EIN allows for a completely different tax structure.
Yeah.
And crucially, it creates separation from personal liability.
How did that separation work?
He contrasts it directly with the SSN. If you do business using your SSN, he says, you are personally considered the owner of that activity. Your natural person is directly linked to all the business's liabilities, taxes, debts, lawsuits.
So you're personally exposed.
Totally exposed. But the EIN, when used correctly, lets the natural person control an entity, like a corporation or trust, without personally owning it.
The control versus ownership distinction again.
Precisely. That separation acts like a shield. The business entity has its own liabilities, separate from your personal assets. Kalam argues this is exactly how the wealthy operate. They control massive businesses and assets through these legal fictions, these entities with EINs, while their personal, natural selves remain insulated.
So it's about shifting the risk, the liability, away from you personally by using these separate legal structures. But he also mentions another big advantage: fringe benefits. How does that fit in? How does it cut down personal taxes?
Yeah, the fringe benefits are a really practical outcome of this structure. This is where it gets tangible for the natural person who is controlling but not owning an entity like a corporation or a trust.
Okay, how does it work?
Kalam explains that expenses that most people consider purely personal and therefore have to pay for with after-tax money can become legitimate business expenses for the entity.
Like what kind of expenses?
Things like your cell phone, maybe professional clothing, operation of your food costs if related to business, even potentially part of your housing if you have a home office, and definitely business-related travel.
So the business pays for those things?
The entity you control pays for them, yes. They're classified as legitimate business expenses. The income comes into the entity pays these costs.
And that means less income needs to flow to you personally to be taxed.
Exactly. It effectively reduces your reported personal taxable income because the entity is covering costs that would otherwise come out of your taxed personal funds. He even points to IRS Publication 15B, which discusses fringe benefits for public entities, suggesting these strategies are documented and legal within the tax code.
So it's not about hiding money, it's about structuring expenses legally through the business entity.
That's how he presents it. Understanding the commercial rules and using them legally to optimize your finances instead of just paying for everything personally after taxes have already been taken out.
This sounds like a powerful way to manage day-to-day finances while building wealth. But Kalam also tackles a huge issue for wealth building: passing it on, probate, death taxes.
Wow.
They can wipe out a lot, right? How does his approach with trusts and this trustee training solve that?
Yeah, that's a critical piece for him because ultimately, his goal isn't just about getting by. It's about achieving real control over your life and time and ensuring that wealth lasts beyond you. It's about generational wealth.
And probate is a big obstacle
A
there.
huge one. He highlights this problem.
Mm-hmm.
If you die without a proper will, or more importantly in his view, without a trust structure in place, a massive chunk of your wealth, he throws out figures like half or 2/3, can just vanish into probate costs, death taxes, inheritance taxes.
Which explains why wealth often doesn't survive generations.
He argues it's a major reason. So his solution, he strongly advocates for something he calls private trustee training.
Trustee training, what does that involve?
It's training designed to teach you how to manage your life and assets from that, control everything, own nothing. Perspective, he keeps emphasizing. A core part is learning how to set up and manage trusts properly.
And how do trusts help with generational wealth?
The key is setting up successor trustees within the trust. This creates a mechanism for the family's legacy and wealth to be passed down generation after generation, often largely avoiding those estate taxes.
How does it avoid the taxes?
Because the wealth is held by the trust, which is a legal entity, not directly by the individuals who die. So when a trustee passes away, the assets don't necessarily trigger the same estate tax event as personally owned assets would. The trust continues, with the next trustee stepping in.
Like how the super rich families operate.
He draws that exact parallel. He mentions families like the Rothschilds and Rockefellers, suggesting they've used similar long-term strategies for centuries, controlling vast assets through trusts and foundations instead of owning them personally as individuals. It keeps the wealth consolidated and protected across generations.
It sounds complex, but also potentially very effective.
Mm-hmm.
Now, he seems very careful to distinguish between legal and illegal ways of handling money. How does he draw the line between tax evasion, which is illegal, and tax avoidance, especially using charity?
He's very clear on that distinction. He absolutely condemns illegal tax evasion, but he champions legal tax avoidance, which he states is standard practice among the wealthy and informed.
And how does charity fit into legal avoidance?
He argues that strategic tax avoidance, especially when channeled through charitable structures like private foundations, actually benefits the public good.
Benefits the public. How?
His reasoning is that it lightens the burden on the government. He provocatively calls the government nothing but a big charity, implying that private charitable giving, facilitated by tax incentives, can fulfill societal needs more effectively or efficiently than government programs.
Does he give an example of this?
Yes, he shares a really interesting one. He talks about clients he worked with who were regular W-2 employees, had normal jobs, But they went through his recommended trustee training, and after that, they set up their own private family foundation.
A foundation, even as employees.
Apparently so, and this structure allowed them to legally donate a significant chunk. He specifies 30% of their income from their jobs directly into their own foundation.
And the benefit?
The benefit, according to Kalam, was huge. They received a 30% tax deduction on their personal income tax return. It directly reduced their taxable income base.
30%. That's substantial.
Very substantial. And he stresses this isn't some shady loophole. He says it's verifiable on the IRS website. It's a documented, legitimate strategy used by informed people to manage their taxes, reduce their burden, and build wealth simultaneously, all completely within the legal framework. It's about knowing and using the rules, not breaking them.
Okay, let's talk about the high-profile examples he uses. He brings up Donald Trump, specifically regarding his tax records. What's Kalam's take on why Trump could legally refuse to release them? What does it illustrate about this private wealth management idea?
Right. The Trump example is one he uses to make his point very concrete. And what's fascinating is Kalam's core assertion. This isn't about hiding assets illegally. It's about structuring them so the individual controls them without direct personal ownership. That separation, he argues, is the key model for the elite in the U.S.
So how does that apply to Trump's taxes?
Kalam directly tackles the public debate around Trump refusing to release his tax returns. His explanation is straightforward within his framework. Trump can legally do that, he claims, because he primarily doesn't use his Social Security number to conduct his business affairs.
He uses something else.
Exactly. Kalam asserts Trump operates mainly through trusts or other forms of legal fictions or legal names or legal persons, which Kalam essentially equates with entities operating under employer identification numbers or EINs.
And because the businesses operate under EINs?
The income generated flows to those private entities, the trusts and legal fictions. Kalam argues Trump isn't pulling down public monies in a way that would be directly tied to a personal SSN. Therefore, he claims, Trump doesn't have personal income from these ventures to report in the same way an employee or a sole proprietor using only an SSN would.
So the income stays within the controlled entities, not hitting him personally.
That's the essence of Kalam's argument. He presents it as a legitimate, common strategy among the wealthy and informed. They manage vast assets and income streams through these private structures, effectively separating their personal financial identity from their complex business operations, all perfectly legal within the commercial jurisdiction's rules.
It definitely paints a picture of a different operating system for wealth at that level. And Kalam doesn't just stop with Trump, right? He mentions Bill Gates and Mark Zuckerberg, too, following a similar pattern.
He does. He uses them to illustrate that this isn't a one-off strategy, but a recognizable blueprint. First, he makes an observation about corporations in general, that they have this unique ability, unlike individuals, to plead poverty, operate heavily on debt. He even provocatively claims the U.S. government itself is doing this, suggesting it's in Chapter 11 bankruptcy. And corporations can reorganize, restructure without necessarily losing everything, unlike personal bankruptcy often works.
Okay, so corporations have more flexibility. How does he connect that to Gates?
With Bill Gates, Kalam brings up the history of the antitrust lawsuit Microsoft faced. He specifically links that legal battle to issues around the structure and control of trusts. And he claims that eventually Gates restructured his relationship with Microsoft. He transitioned his personal ownership stake into the Bill and Melinda Gates Foundation.
So the foundation now holds the connection to Microsoft.
Kalam claims the foundation now receives financial disbursements, like dividends or profits perhaps, from the corporation. He presents this as a clear strategic move, shifting from vulnerable personal ownership to control via a charitable foundation. It manages the wealth, ensures continuity, and offers significant tax advantages.
Moving from owning to controlling via a foundation. And Zuckerberg, same pattern.
He applies the exact same analytical lens. Kalam states that Mark Zuckerberg, who was initially the direct owner of Facebook, followed a similar path by creating the Zuckerberg Foundation.
And that foundation.
According to Kalam, that foundation now receives the royalties, dividends, profits generated by Facebook, or Meta now. It mirrors the Gates example perfectly in his narrative.
So for Kalam, these aren't just isolated cases.
Not at all. Connecting it to the bigger picture, he uses Gates and Zuckerberg to hammer home the point. Separating the natural person from the legal person and shifting from personal ownership to strategic control through trusts and foundations is the established playbook for the super wealthy. It's how they manage liability, minimize taxes, and ensure wealth passes down through generations, often, he implies, largely tax-free. It's the practical application of own nothing, control everything.
Okay, shifting gears a bit. Don Kalam is very dismissive, even critical, of what he calls sovereignty movements, people trying to declare themselves outside the system. What does his stance on that reveal about his overall philosophy for how to actually navigate society, especially this clash between personal beliefs and the commercial reality he keeps describing?
Yeah, his critique of sovereignty movements is really telling. What's fascinating is his absolute insistence that personal stuff, your feelings, your nationalism, your religion, he considers all that private. And he argues it holds basically zero weight in the public sphere, which for him is the commercial jurisdiction.
So personal beliefs are irrelevant in public interactions.
Pretty much. He sees them as distractions from the fundamental business rules that actually govern the land. He repeats that line often. It's all about business. It ain't personal.
So trying to claim sovereignty or return your birth certificate?
He sees it as fundamentally misguided, futile even. He's quite blunt. He points out the U.S. is one of the most heavily armed jurisdictions in the world. You can't just declare yourself out.
But he also calls it a free jurisdiction.
He does acknowledge that aspect, the freedom to roam from one state to the next without internal borders, generally speaking, though he does add a little note that the Real ID Act might be changing that dynamic somewhat.
What about the idea some people have that you can't go to jail for debts?
We'll be back after a quick break.
Are you ready to unlock the secrets of commerce and build an empire that lasts for generations? Look no further. Introducing $1 Million Worth of Game by Don Kalam, your official guide to the private and public side of commerce. In this groundbreaking book, Don Kalam reveals the strategies and insider knowledge you need to create and protect your wealth. Learn how to navigate the intricate world of commerce, master the art of building an empire, and secure a lasting legacy for your family. Get your hands on $1 Million Worth of Game today and embark on a transformative journey toward financial abundance. Don't miss out on the opportunity to build your empire and secure a prosperous future for generations to come. Get ready to conquer the world of commerce. $1 Million Worth of Game by Don Kalam, your ultimate guide to building an empire and leaving a legacy. $1 Million Worth of Game by Don Kalam. Available now. Get your copy and start your journey to generational wealth.
He directly confronts that. He says, yes, you can go to jail for certain debts, giving child support obligations as a key example. And he reframes jail itself. He argues that serving time is actually a form of paying your debt to society, specifically for breaking commercial laws, not criminal laws in the way we usually think of them.
So failing to pay child support is breaking a commercial law.
In his framework, yes. The system is designed, he believes, to hold the legal person accountable for its commercial contracts and obligations. If you default, there are consequences within that commercial system, which can include incarceration as a way of settling the debt.
Okay, so even something that feels very personal, like child support, is viewed through a commercial lens. So how does he advise people to interact with authorities then? Police, judges, if it's all about business?
His advice is consistent. Approach every interaction with any commercial entity, and he includes police officers, judges, government agencies in that category. Approach them in a purely commercial manner.
Not emotionally, not based on personal grievances.
Definitely not. He argues against getting adverse or confrontational based on personal feelings or claims of individual sovereignty or rights in the abstract. He believes those approaches are totally ineffective because they're operating on the wrong level.
So what does a commercial manner look like in that context?
It means setting aside the personal, the ideological, and focusing solely on the commercial rules of engagement. What are the contracts involved? What are the precise definitions being used? What are the specific commercial obligations at play in that situation?
Like negotiating a business deal, almost.
In a sense, yes. Understanding the terms, the jurisdiction, the liabilities according to the commercial rules. He genuinely seems to believe that if you fail to adopt this business-oriented mindset, you'll just keep struggling. You'll always be on the wrong side of the jurisdiction's laws because you're trying to argue feelings or personal rights in a system that, in his view, only understands commercial terms. It really is all business, not personal for him.
He really is challenging the traditional paths, isn't he? Especially what he calls the employee mindset. If his perspective holds any water, what does that imply for the future? For work, for education?
It definitely raises huge questions because for Don Kalam, the whole point isn't just earning a living. It's about achieving ownership and more control over your time and over your life. And that, he argues, only comes from an entrepreneurial, intelligence-driven perspective, not from being an employee.
And he's very critical of that employee mindset. He uses statistics, right?
Yeah, he hammers this point with statistics he attributes to the Bureau of Labor and Statistics and the Social Security Administration. He paints a pretty bleak picture for age 65.
What are the numbers he cites?
He claims that out of every 100 people reaching 65, a shocking 55% are dead broke. Another 30% are actually dead. Only 5% are still working. Just 4% are considered financially secure. And a tiny 1% are truly wealthy.
Wow. Whether those numbers are exact or not, the picture is grim.
Exactly. He uses it to argue vehemently against relying solely on a job. He frames the traditional career path as almost a setup for failure or struggle in later life.
And he connects this directly to the education system.
Oh, absolutely. He asserts that schools, fundamentally, were put in place by John D. Rockefeller with the General Education Board.
Rockefeller.
Yes. And because schools are mostly taught by employees, he argues their primary function is to program individuals to be employees, not entrepreneurs.
That's a strong claim. He even mentions HBCUs.
He does, very provocatively. He claims that even well-known historically Black colleges and universities like Morehouse and Spelman were actually started by Rockefeller, not by African Americans.
Wow, challenging founding narratives there.
His point, however controversial the example, is that the entire educational system, from its roots, is designed to create a compliant workforce, not a nation of independent business owners and innovators.
So he sees the education system as actively discouraging entrepreneurship.
Yeah.
How does he see the job market itself changing? He talks about skills versus intelligence.
Yes, he draws a really sharp line there. He argues society is rapidly shifting. We're moving beyond needing just basic skills. He uses the old example of digging ditches manually and demanding intelligence, which he defines as the ability to create the systems or machines that perform those skills. So designing the machine that digs the ditch, not just operating the shovel.
And he have modern examples.
Yeah, he points to things happening right now. Tesla pushing for fully automated cars, he predicts that will massively reduce the need for human mechanics. Or the Washington Post downsizing, replacing human button pushers with automation in various departments.
And he doesn't see this as necessarily bad.
He frames it as just the natural evolution of the commercial jurisdiction. It's an opportunity, he suggests, for people to become more productive by using their intelligence in smarter, more leveraged ways.
So the future demands a business mindset.
Absolutely. Rooted in intelligent problem solving, innovation, strategy, not just having a skill that can be automated. This all feeds back into his core message. You have to proactively embrace entrepreneurship and strategic thinking to thrive. The old employee model, he argues, is becoming obsolete in this evolving commercial world.
Okay, let's talk about law. Don Kalam puts a lot of emphasis on understanding the law, but not necessarily becoming a lawyer. He talks about law libraries, contract law. What's the strategy here?
Well, what's really interesting is his core belief in critical thinking and, maybe more importantly, applied knowledge. It's not just knowing stuff, it's using it effectively in this commercial jurisdiction.
So you don't have to do it all yourself.
No, in fact, he advises the opposite in some ways. He says, hire people smarter than you, get good accountants, good lawyers, don't try to be the expert in everything. But he stresses, you still need to know enough to pick the right experts and, crucially, to direct them effectively. You need to understand the landscape they're operating in for now.
And law libraries fit into this.
Yes, he places huge importance on individuals understanding the actual laws of the jurisdiction. He really encourages people, quite passionately, to go visit their local law library. He points out they're publicly available, usually in county courthouses.
Why? To read statutes.
Specifically, he emphasizes learning how to draft contracts. He sees this as a fundamental skill for empowerment within the system, knowing how to structure agreements properly.
And he distinguishes his approach from others.
He does. He says he focuses on citing the law directly, finding the actual statute or code. He contrasts this with others who, he says, just interpret the law, which he sees as an amateur move, something that leads to mistakes and legal trouble.
Stick to the text.
Right. And he brings up a key principle, especially in what he calls the private contract world. He says, contract makes the law.
Contract makes the law. What does that mean practically?
It means, according to him, that within a private contract, the parties can essentially set their own rules. He claims there are no statutory limitations in that private sphere, and you can even specify which jurisdiction's laws will govern that specific contract.
Wow, that sounds like a lot of power.
He presents it as granting immense power and flexibility, allowing individuals to operate somewhat outside the constraints of conventional public law, setting their own terms of engagement within the larger commercial system. He sees mastering contracts as a vital tool for private individuals.
Don Kalam really draws this sharp line between public information, which most people have access to, and private information, which he says the wealthy use. What are the practical implications of understanding this difference? How does it lead to freedom?
Yeah, that public versus private distinction is fundamental for him. And connecting it to the bigger picture, he really believes that grasping and using this private knowledge is what allows individuals to operate with the, quote, highest level of integrity and accountability. It frees them, he argues, from the limitations and liabilities inherent in just operating within the public system.
So what constitutes private versus public information?
He contends that private information, the real actionable knowledge about how the commercial and legal system actually works, especially regarding entities, trusts, contracts, is effectively hoarded. It's kept close and systematically used by what he calls informed families, the elite, the wealthy.
And public information.
Public information, like what you get in school or maybe mainstream media, he sees as just consumed. People take it in, but often don't use it effectively, or it doesn't give them the real tools for control. He even labels public education specifically as controlled knowledge.
Controlled, meaning designed to limit.
He suggests it's designed to keep people operating within that public framework, the employee mindset, rather than empowering them with the private knowledge needed for genuine financial and commercial freedom, the kind the informed families possess.
And he connects this private knowledge back to the Constitution.
He does. Frequently. He often brings up Article 1, Section 10 of the U.S. Constitution.
What does that section say in his view?
His interpretation is that it provides a powerful guarantee of the right to contract. Crucially, it ensures that no state can impair the obligation of a contract.
Okay, the right to contract is protected. How does that help the individual?
He argues this constitutional protection empowers individuals to create private documents, essentially, private contracts between themselves and their own entities, perhaps. In these documents, they can explicitly state their status as a natural being, while simultaneously acknowledging their use of commercial instruments, like an EIN, for their business dealings.
So it legally separates the natural person from the commercial activity.
That's the idea he promotes. It creates a clear legal distinction, offering that layer of protection and control. This contrasts sharply with what he calls adhesion contracts.
Adhesion contracts, what are those?
He describes these as the typical contracts most people encounter daily, where he says the government trust is in place. Think about signing up for your phone service or clicking I agree to terms and conditions online.
But you don't negotiate those.
Exactly. You just adhere to them. You have no power to negotiate the terms. Kalam implies this signifies a fundamental lack of control over your own commercial life when you're only operating within that public adhesion contract framework.
So understanding the private information, using private contracts, that's the key.
For Kalam, yes. Understanding the distinction, actively seeking out and applying that private knowledge about contracts, entities, and the Constitution, that's how you navigate the commercial jurisdiction with autonomy, integrity, and ultimately achieve greater financial success and freedom from the constraints of the public system.
Wow. This deep dive into Don Kalam's perspective, it has definitely been a journey. I mean, from understanding the U.S. as this inherently commercial place where we're supposedly all born into business.
Yeah, that's a big shift right there.
Right, to seeing things like birth certificates and social security numbers, not just as ID, but as foundational commercial instruments.
Secret contracts, yeah.
And then exploring that really profound difference he sees between just earning stuff and strategically controlling it, using tools like EINs, trusts.
The own nothing, control everything mantra.
Exactly. To manage wealth, practice legal tax avoidance, and even set up these generational legacies, like he suggests figures like Trump, Gates, and Zuckerberg have done.
Using those high-profile examples to illustrate the blueprint.
It's a direct challenge, isn't it? To move past that employee mindset he critiques so heavily, to embrace entrepreneurship and really try to master these private aspects of law and finance he talks about.
It really is a call to rethink how we operate within the system.
Absolutely.
Yeah.
It seems his vision ultimately suggests that Real freedom, real financial security, it doesn't come from ignoring the rules or wishing them away.
No, quite the opposite.
It comes from a deep understanding and a really strategic application of the commercial rules that are already in play, whether we realize it or not.
Which definitely leaves you with something to think about. It raises this important question. If the wealthy, as he claims, have always operated on this principle of owning nothing and controlling everything, what would happen? What would the personal, even the societal implications be if that kind of knowledge, that way of operating, became truly widespread?
Yeah. Would it shift power dynamics? Would it redefine accountability completely?
Could it? It's a provocative thought to end on.
It really is. So what stands out to you listening today from this deep dive? We really hope this conversation has maybe given you a fresh perspective, a new lens to look at your own financial world.
Maybe sparked an aha moment, perhaps.
Hopefully, an aha moment about the opportunities that might be available when you start to understand, or at least consider, these deeper rules of the game as Don Kalam presents them.
Keep digging, keep learning.
Exactly. Keep diving deeper into the topics that spark your interest and keep gathering that knowledge quickly but thoroughly.
In a world where borders can limit opportunities, one book dares to challenge the norm and empower foreign nationals like never before. Introducing Can't Touch This: Diplomatic Immunity as a Foreign National by best-selling author Don Kalam. Did you know there is a difference being a citizen and national? This is for foreign nationals seeking to expand their horizons. Do you dream of obtaining a diplomatic passport and the freedom it brings? Don Kalam reveals the secrets to unlocking diplomatic immunity and creating your own nation. Discover why you are already a foreign national, learn the steps to obtain a diplomatic passport, and explore how you can be recognized by numerous nations on your diplomatic journey. Most never knew they could have diplomatic immunity as a foreign national. This book is a game changer for anyone seeking freedom and recognition on the international stage. Get your copy of Can't Touch This today and embark on a journey towards diplomatic immunity and creating your own nation. Order your copy now and unlock the power of diplomatic immunity as a foreign national. Can't Touch This: Diplomatic Immunity as a Foreign National by Don Kalam. Available now at leading bookstores and online. Get your copy today.